All right, so you know how GameStop, like they're a big deal in gaming, right? But have you ever wondered how they're actually doing money-wise? Like, are they thriving or just surviving? Well, you sent us their latest earnings report, the one they just dropped covering the fourth quarter and all of fiscal year 2024, and we're diving deep into it today. Basically, we want to pull out the most important financial stuff, see what story it tells and highlight what's really interesting and relevant from this official report, all without like completely burying you in numbers.
Yeah, for sure. I mean, we're going beyond just the raw numbers to really try to get a feel for GameStop's financial health and,
Yeah.
maybe even get a glimpse of where they might be headed next. And this is straight from their press release, so we're working with the official word, so to speak.
Perfect. All right, so let's just jump right in. Fourth quarter, first thing you see, bam, net sales, $1.283 billion. $1 billion. That's got to be good, right?
That sounds impressive, right?
Yeah, it does.
But if you compare it to the same period last year, the fourth quarter of 2023, they actually brought in $1.794 billion. So that's a pretty noticeable dip in their overall sales.
Yeah.
We're talking like over $500 million less.
Whoa, okay, so not just the small dip, like a cannonball into the pool. But I'm looking at their expenses here, and something interesting is going on. So they're selling general and administrative expenses, all that stuff they spend on operations, salaries, marketing, you name it. Those went down. Like
Yeah.
they went from $359.2 million in Q4 last year down to $282.5 million. That's a pretty big cut in their operating costs.
Yeah. And you know what? It looks like those cost-cutting measures, they really made a difference on their bottom line. Even though they sold less overall, their net income, meaning their actual profit, well, that actually went up, and in a big way.
Really?
Oh, yeah. They went from a net income of $63.1 million in Q4 of 23 to a much healthier $131.3 million this past quarter.
Whoa, so even though they sold less, they kept more?
That's exactly what it looks like. They managed to squeeze more profit out of each dollar of sales. It's pretty remarkable. And that's not all. Their adjusted EBITDA also went up.
Okay, now hold on. EBITDA. I know you finance folks love throwing around these acronyms. Can you break that down for us, regular folks? What is EBITDA and why should we care?
Okay, fair enough. So EBITDA, it stands for earnings before interest, taxes, depreciation, and amortization.
Oh, got it. Earnings before ITDA. Makes sense.
Right, it's a mouthful. But basically, it gives you a look at a company's operating performance without all the financial complexities like debt payments or taxes. Think of it as their raw profit from running the business itself. And in GameStop's case, their adjusted EBITDA increased from $88 million to $96.5 million. So even when you factor out those other things, they're still more profitable.
Okay, so they're making more money from their core business. That makes sense. But there's this one thing in the report that's like screaming at me. Their cash on hand. By the end of the quarter, they were sitting on $4.775 billion in cash equivalents and investments they can easily sell. That is a ton of money, like Scrooge McDuck swimming in a vault full of gold coins kind of money.
It's a lot of financial firepower, that's for sure. And it gives them a lot of options. Remember, they also made some big moves this quarter. They finalized the sale of their Italian operations, and they decided to shut down their stores in Germany. So these are pretty big decisions that probably had an impact on, these financial shifts we're seeing.
Okay, that's the quick and dirty on the fourth quarter. Now zoom out with me. We're looking at the whole fiscal year 2024 now. And guess what? We see that same trend of lower sales overall. For the full year, they brought in $3.823 billion, way down from the $5.273 billion in fiscal 2023. That's a pretty big drop over the entire year, not just a one-quarter thing.
Right, the lower sales weren't just a blip in Q4. It was a theme for them throughout the year. But just like in the fourth quarter, their ability to control costs seems to be a big part of their story here. Their SG&A expenses for the whole year also decreased from $1.324 billion down to $1.130 billion. So they're really managing their spending.
And it seems like that focus on cutting costs had a huge impact on their, what do you call it? Their bottom line, yeah. For the full year, they reported a net income of $131.3 million for fiscal 2024, which is a crazy jump from the measly $6.7 million they made in fiscal 2023. Like, whoa, going from barely making a profit to raking in like that, that's got to be good for them.
It is, yeah.
Right.
Going
Yep.
from, a relatively small profit to a significantly larger one year over year is definitely something worth noting. But hold on. If we look at their adjusted EBITDA for the full year, we get a slightly different picture. It actually decreased from $64.7 million in fiscal 23 to $36.1 million in fiscal 24. So While their, reported profit looks amazing, the adjusted EBITDA suggests that their core business, like the actual operations, weren't quite as profitable as the year before.
So their GAAP net income, which is the profit reported under the standard accounting rules, that looks fantastic for the whole year, but their adjusted EBITDA is kind of telling a different story about how their actual business is performing.
Exactly. And it's a good example of why companies present both types of numbers. It gives investors different ways to analyze their results. It's like looking at the same picture from different angles.
Makes sense. Okay, let's shift gears a bit. Let's talk sales mix. So this basically tells us where GameStop's money is actually coming from, and how those sources of revenue are changing over time. In Q4 2025 compared to 2024, the sales of hardware and accessories, things like consoles, controllers, all that jazz, they took a pretty big hit, both in terms of how much money they made from it and what percentage of their total sales it represented. Like, it went from over $1 billion, $1.0946 billion, down to $725.8 million. And as a percentage of total sales, it dropped from 61% to 56.6%. That's a big change.
Yeah, this is a very significant shift. They sold a lot less hardware and accessories compared to the previous holiday season. Could be because more people are buying games digitally these days, or maybe just a lack of really exciting new consoles hitting the market.
Yeah, that makes sense. And it's not just hardware. Software sales, meaning the actual games themselves, those also took a dip from $465.3 million down to $286.2 million. And as a percentage of total sales, it went from 26% down to 22.3%.
Yeah, it's likely, like you said, that more and more people are just choosing to download their games these days.
Right, digital downloads are huge. But here's where things get interesting again. Collectibles. Think Funko Pops, trading cards, all that geeky merch. It's becoming a much bigger part of their business. In fact, their net sales in this category actually went up from $233.7 million to $270.6 million. And as a percentage of their total sales, it jumped from 13% all the way up to 21.1%.
Whoa, that's a pretty big jump, isn't it?
Yeah, it's a huge increase in how much of their money is coming from collectibles, at least in Q4. It makes you wonder if this is part of their master plan.
Yeah, it definitely suggests a shift, right?
Yeah.
They seem to be relying more and more on collectibles to bring in the money, especially with their traditional gaming segments, struggling a bit.
Yeah, it's like they're becoming more of a pop culture store than a strictly video game store. Okay, so let's look at the sales mix for the entire year. Same patterns, but maybe not as drastic. Hardware and accessories and software both down in terms of actual dollars and as a percentage of total sales.
Yeah. But for the full year, the performance of collectibles is really interesting. Their net sales in this category actually went down a bit, from $754 million to $717.9 million.
Right.
But even with that dip, it actually became a bigger chunk of their overall business, going from 14.3% of their total sales to 18.8%.
So even though they made a little less money from collectibles overall, it became a more important part of their business for the whole year. It's like it really reinforces the idea that they're doubling down on this whole collectibles strategy.
It does. It makes you wonder if they see their future, more as a retailer of like pop culture merchandise than a purely video game focused store.
Yeah, good point. Okay, let's dig into some other interesting stuff from their financial statements. First up, that crazy increase in their cash and cash equivalents, remember? Year over year, it went from $921.7 million to a mind-blowing $4.756.9 million. It's like they found a money tree and shook it really hard.
It's an enormous amount of cash. Like, what are they going to do with all that? It gives them so many options. They could buy other companies, invest in new projects, or just have a really comfortable cushion, just in case.
Hmm.
We also see a decrease in their merchandise inventories from $632.5 million down to $480.2 million. Could be they're managing their inventory better, or maybe they're just adjusting to lower demand for some products.
Yeah, interesting. Another thing that jumps out is their stockholders' equity, which is basically how much of the company is owned by its shareholders. That number shot up from $1.33386 billion to $4.9298 billion. That's a huge boost to their overall financial health. Basically, it means they have a lot more assets than debts, which makes them a much more stable company.
Yeah, this is a really important point. A strong stockholder's equity usually means the company is on solid financial ground. It's a good sign for investors.
And the press release actually explains this huge jump in cash and stockholders' equity. It says they raised a bunch of money by issuing shares through what they call at-the-market offerings. Basically, they've been selling shares of their stock directly to the public, and they raised a ton of money this way. We're talking $3,453.8 million in fiscal 2024 compared to like Nothing the year before.
So that massive pile of cash, it mostly came from selling more of their stock. It wasn't from their core operations like selling games and collectibles. It makes you wonder, what their plan is for all this new money. Are they going to go on a shopping spree, invest in something big? It's definitely something to keep an eye on.
Absolutely. All right, last thing. I know we touched on this before, but can you quickly explain those non-GAAP measures they talk about, like adjusted SG&A and adjusted EBITDA? What's the deal with those?
Sure. So non-GAAP measures, they're basically ways for companies to present their financial performance, but they get to exclude certain things they think don't really reflect how their business is actually doing.
Mm.
Things like restructuring costs, one-time write-downs, stuff like that. It's all about giving investors a clear view of their core performance without all the noise from unusual events.
So when they report an adjusted EBITDA of $96.5 million dollars for the fourth quarter, but their GAAP net income was $131.3 million, dollars, that difference is because of these adjustments. And for the full year, the adjusted EBITDA of $36.1 million dollars looks a lot different from the GAAP net income of $131.3 million. Dollars. So you got to look at both, the official profit and the underlying business performance to really understand what's going on.
Exactly. And if you're really curious about the nitty-gritty, the press release has detailed tables that show exactly how they calculated these adjusted figures. You can see exactly what they added and subtracted. It's all there in black and white.
Great. So transparency is key. All right, almost done. Just a quick note. The press release, of course, has the usual cautionary statement about forward looking statements. Basically, they're saying, hey, we're trying to predict the future here, but who knows what's going to actually happen. There are always risks that could mess things up. It's like the fine print, but it's important.
Yeah, it's a reminder that just because they did well in the past doesn't mean it's smooth sailing from here on out. The future's always a bit uncertain. They also mentioned that they won't be holding a conference call to go over these results with analysts. They're basically telling people to check out their Form 10-K filing for more details.
Okay, so let's wrap this up. What are the key takeaways from all this financial deep dive into GameStop? Well, their net income went up, both in the fourth quarter and for the full year. That's good news. But it happened while their overall sales were actually going down. So they're making more money even though they're selling less, which means they've gotten really good at managing their costs. Plus, they have a ton of cash on hand and are in a much stronger financial position now, mostly because they sold a lot of their stock.
Yeah, and we also saw some mixed signals from the adjusted EBITDA, and it's clear they're shifting away from just selling games and consoles. Collectibles are becoming a bigger and bigger part of their business, and it's raising questions about what direction they're headed in the long run.
Exactly. They're kind of reinventing themselves, right? So here's something to think about. They're sitting on almost $5 billion in cash. What are they going to do with all that money? What kind of companies could they buy? What kind of crazy investments could they make? This massive war chest really opens up a lot of possibilities. It's a wild time for GameStop, and it's going to be fascinating to see what they do next.